After posting a stellar quarter, is Meta headed back to all-time highs? And can this one be bought on the way up? Hey guys, hope you are doing well out there. Today we are taking a look at Meta Platforms. They just reported their Q2 numbers after the bell, and I see in the after hours there's a nice reaction to these numbers. The share is up 4.3%, nearing $311 per share. We'll dive into their key results, take a look at some estimates that analysts had for this most recent quarter, dive into their statements of income, balance sheet, and cash flows. Take a look at it from a segment basis. We can see advertising crossed a key revenue barrier. However, Reality Labs continues to struggle. And lastly, we'll take a look at Meta Platforms from a technical chart pattern. This one making a near perfect V recovery and heading higher. We'll see if this one will meet resistance at the top or possibly even break through it. If you are new to the channel and find this type of content valuable, be sure to hit that like and subscribe button below for more. In the after hours, I see this one up 4%. After in the regular trade, it was up 1.3%. Its 52-week high is 318, so it's getting close to there as it's trading at 310 in the after hours. This one has been on a stellar run over the past 1 year, up 79%, and year to date, yes, just up 139%. It's been on an absolute monster run, and congrats to anyone that was picking up shares of Meta late last year on this falling knife. Certainly wasn't easy, but you've made money hand over fist, so give yourself a pat on the back for that. Taking a look at Meta's estimates for this most recent quarter, we see earnings were expected to come in the range of $2.91. They posted an earnings of $2.98, so a nice beat on that bottom line. Revenue was expected in the range of $31.12 billion. They posted nearly $32 billion on the dot, so a beat on the top line as well. DAUs and MAUs are both key metrics to watch for Meta's family of apps, which includes WhatsApp, Instagram, Facebook, and Messenger. Both were a beat as DAUs came in at $2.06 billion. 2.04 were expected, so close but a slight beat. And MAUs came in at 3.03 billion users, where 3 billion were expected. Taking a look at some costs and expenses, Meta did accrue a large legal expense in this most recent quarter, which we'll see, and they are restructuring a large portion of their business, and so they experienced some restructuring charges. They do still have $40 billion available and authorized for share repurchase. They purchased $793 million worth of common stock in this most recent quarter. We'll see in their cash flows that they've significantly reduced their pace of stock repurchase, which actually is a good thing considering the stock is up nearly 140% year to date. Free cash flow in this most recent quarter came in at nearly $11 billion, and we see that headcount decrease of 14% year over year. Early this year, all the news was about the Meta layoffs, doing tons of layoffs, and so headcount in this most recent quarter, it only approximates for half of the employees laid off in 2023, so we should see this headcount continue to decrease. Taking a look at Meta's outlook, they expect third quarter revenue in the range of 32 to 34.5 billion. If we look at street estimates, we can see estimates were closer to 31.1 billion for this upcoming quarter, and so Meta on its low end of its guidance still beat revenue estimates, and so that could be one of the reasons why this stock is up nearly 4% in the after hours as they raised the outlook on their revenue. We see they mentioned Reality Labs operating losses are expected to increase year over year in 2023 as a result of restructuring costs, severance, personnel costs. They do continue to invest more and more into AI and the metaverse, and so ultimately this story comes down to that AI and metaverse topic. If you believe that Meta will be able to drive growth in those businesses, turn those businesses from money losers to money makers and substantial money makers while continuing to just chug along on their advertising business, then this one is primed to continue to move higher. They did say for the Reality Labs, they do expect operating losses to increase meaningfully year over year, continued efforts in reality and virtual reality to further scale that ecosystem. They do expect cost savings in other areas, particularly on non-AI servers, and continue to drive investments both in data centers, servers, and AI. So you can see Meta is shifting and focusing heavily on this AI run. They are certainly one of those leaders and don't want to be left behind in this AI wave. Moving on to the statement of income, we see that $32 billion revenue number, which was good for 11% growth year over year. We see costs grew in some areas, however, they were able to control it in others. Cost of revenue and R&D both were up, and we'll take a look into majority of that increase goes towards Reality Labs, which continues to lose money. And so Meta relying heavily on its advertising business. We see marketing and sales tick down, which is a good way to control costs for Meta. We do see G&A ticked up substantially in this most recent quarter. However, that was largely due to an accrued legal expense of nearly $2 billion as they were fined by the European Data Protection Board on the ongoing data transfer matter. So a one-time expense on G&A, however, that did increase their total cost and expense by roughly $2 billion. We see income from operations ticked up nicely, up nearly $1 billion, and that net income up another $1 billion as well. We see EPS came in at $2.98, which was good for 21% growth year over year, solid growth on that earnings side. And you can see that shares outstanding continue to decrease, and Meta continues to buy back shares, and they still have nearly $40 billion authorized for that share repurchase program. Moving on to the balance sheet for Meta, and boy, is this stellar. It doesn't get much better in terms of a balance sheet for a publicly traded company. You can see property and equipment did tick up as they continue to invest more heavily in infrastructure. And so year over year, they added some more to their property and equipment on the balance sheet. Total assets come in at $206 billion. They did nearly double their long-term debt. However, they do have quite a bit of room for that, as total liabilities are just at $72 billion compared to a total assets of north of $200 billion. Moving on to the statement of cash flows, we bring down that $7.8 billion net income number, get to add back things such as depreciation, amortization, stock-based compensation, which increased year over year. We see that accrued expense, probably that one-time litigation cost, does show up on this cash flows. We can see they're continuing to invest heavily in purchase of property and equipment, roughly $6.2 billion in this most recent quarter. A year ago, it was at $7.5 billion. And so investing heavily into property and equipment. Taking a look at their stock repurchase, we can see they only bought back roughly $900 million worth of common stock. You see last year they were buying back roughly $5.2 billion worth, so a significant slowdown in the repurchase of common stock. But when your stock recovers in nearly a straight line up, that's good to see. That last June, Meta was buying shares at roughly $150 per share, and since then it's more than doubled. Moving on to the different segments for Meta, we see they have the family of apps, which includes Facebook, Instagram, Messenger, and WhatsApp. And then the other segment is Reality Labs, which includes augmented and virtual reality hardware and software. As much as Meta wants to rebrand themselves, focus on the metaverse, focused on the Quest goggles, they're still an advertising company. This is the bread and butter of their business. This is how they pay for the Reality Labs segment to just lose money. And so family of apps generated $31.7 billion. Majority of that came in advertising. Advertising surprisingly strong in this quarter. They were able to cross over that $30 billion mark, which they've had troubles crossing over outside of a fourth quarter where advertising is booming because of iOS changes, because of TikTok competition. They were struggling to break that $30 billion barrier, but looks like Reels monetization is coming in strong. Taking a look at this Reality Lab segment, we see revenues were down from 450 million down to 270 million. And so while they're continuing to pour more and more money into the Reality Lab segment, it's generating less and less revenue. And even the revenue it does generate, it's minuscule compared to their advertising revenue. This is almost a rounding error for Meta. And so ultimately, investors want to see this segment turn around. They did say operating losses will continue to increase in the Reality Lab segment over the next year. And so as long as Meta continues to still focus on their advertising business, I think investors will give them a pass for this money-losing business that they're focusing so heavily on. Moving on to the technical portion for Meta, we see this one made a near perfect V recovery. Late last year, no one wanted a piece of this stock. It was all doom and gloom for Meta. Everyone was bashing Mark Zuckerberg as he was so heavily focused on the metaverse, and as his tone changed to control costs, have layoffs, focus on Reels monetization, continue to focus on AI, integrating that into the core advertising business, this stock reversed course and sentiment around it reversed, leading this one back close to its all-time highs. Believe it or not, few more trading days, a few more weeks, and this one might be nearing its all-time highs. In terms of a support and resistance level, this one has been channeling up over the past 1 year. It does seem to have clear skies above it, and as long as commentary is good, we know they had strong guidance for this upcoming quarter. We'll see what Mark Zuckerberg has to say about Reels monetization in particular, but also Reality Lab segment. And this one could see resistance near that $345 range, which is still a ways away. However, certainly not out of the question with the way this stock has been moving. I would wait for deeper pullbacks in this one. If you do believe this channel will remain intact, I think near that $290 or even $300 pullback would be the first place I would pick up a few shares of Meta, as I would try to pick it up on the bottom end of this channel, right it up to the top end. And as it gets near this $350 range, it would see some resistance. However, it seemed to have been gapping up, and certainly if it gaps up above this $350 range, there's not a whole lot of resistance above that, and it could be off to the races with Meta. Certainly does have a compelling valuation at now 25 times forward price to earnings. It used to be somewhere around 11 back last year when this stock was closer to $130 per share. And so valuation has caught up with Meta. However, if they continue to post strong guidance, strong results, see good average revenue per user numbers, see continued growth on daily active users and monthly active users, and finally, if they can turn around that Reality Labs business, which will take a while, but if they have promise for that, we can see this stock has continued hope for a further run up. In the subsequent quarters, we do know Apple will be releasing that Apple Vision Pro headset, and so if that turns out to be a flop for Apple, it could actually be good advertising for the Meta Quest, which hasn't seen great sales so far. That was my take on Meta Platforms. Let me know what you guys think of this one in the comments below. Do you think this is a buy, hold, or sell? It's certainly been the turnaround story of this year, and I believe it does have room to run with these sort of results. As always, thanks so much for listening, and I'll catch you guys in the next video.